Welcome to Standard Chartered India Money Insights, a podcast series that brings you topical insights and local perspectives on India's markets from the experts.
Hello everyone and welcome to our weekly podcast, The Week That Was. Markets continue to grapple with the aftermaths of the Ukraine conflict. US and Europe imposed wide-ranging sanctions against Russia, including taking extremely rare measures to remove major Russian banks from the SWIFT payment messaging system and freezing the reserves of the Russian central bank. The steps led to a sharp decline in the ruble currency and Russian assets, which prompted the Russian central bank to double policy rate to 20% and impose capital controls to contain the ruble's fall. For India, the biggest economic impact of the Ukraine conflict is going to be through oil prices, as we import 80% of our oil demand. The government, in its union budget, and the RBI have factored in a very conservative $75 per barrel. Consensus estimates indicate that every $10 rise in crude oil prices drives India's retail inflation higher by 0.4 to 0.5% and current account deficit higher by 0.2 to 0.3% of GDP. With oil trading close to $115 per barrel, Indian assets weakened further this week. The Nifty index was down 2.5% for the week, closing at its lowest level in over 7 months. The benchmark 10-year government bond yield moved higher and closed above 6.8%, while the INR depreciated sharply and closed above 76. Most Indian assets underperformed its major developed and emerging market peers for the second week in a row. If you would like to know more implications of the Ukraine crisis on specifically Indian assets, please listen to our podcast which we uploaded last week, What Moved the Markets. It was also a very heavy macro-driven week. First, the US Fed Chair Powell told the US Congress that the Fed remains focused on tackling inflation and reiterated his call for a rate hike in March, despite the rising uncertainty which is posed by the Ukraine crisis. Second, we had a slew of domestic macro data reported, which indicated that domestic recovery continues to remain strong and that the Omicron wave had very minimal economic impact. Both manufacturing and services PMI for February 2022 rose and they remained well above the threshold level of 50. The government also released GDP data. Third quarter fiscal year 2022 real GDP growth slowed to 5.4%, which was lower than consensus estimates. The government also further lowered a full year FY 2022 GDP growth estimate to 8.9% from 9.2%, primarily on account of upward revisions to past data. However, it's important to note, despite the downward revision, GDP data actually is showing a better recovery than what was forecasted earlier, with FY 22 GDP now expected to be higher than pre-COVID levels, driven by a stronger than expected recovery in industry growth. So while market will continue to grapple with the news flow and developments around the Ukraine crisis, it is important to note that macro data still remains quite strong. For the coming week, investors would also keep an eye on the upcoming state election results, especially for the key state of Uttar Pradesh. So that's all for this week. Thank you for listening to our podcast, and if you find this useful, please like and subscribe. Have a great week ahead.
Thank you for listening to Standard Chartered India Money Insights. Stay tuned for the latest updates and market trends by subscribing to our podcast. For more information, reach out to your Standard Chartered Relationship Manager or visit www.se.com/in.